All I can tell you is that in terms of defaults, they're the best. They have very few, and they attracted a lot of people with Super Bowl ads.
Hi, welcome to the video. And on Tuesday, Rocket Company's stock skyrockets. Is this rally and short selling reminiscent of another meme stock such as GME? In case you're unfamiliar, Rocket Mortgage is a mortgage lending company headquartered in Detroit, Michigan. And in January 2018, this company is the largest overall retail lender in the US, and it's also the largest online retail mortgage lender. They made getting loans much easier, something you could do seamlessly online as opposed to having to go in person to a broker. Recently, they reported a much better than expected earnings, but that does not fully explain this nearly 70+% surge it's experienced in the past day. In this video, we are going to go over what exactly is going on. Is this surge in value deserved? Is there a short squeeze happening? A short answer is I don't think so, but there is something really interesting here. I personally believe this is a momentum play. People are still pretty fresh from the GameStop experience, and when they see a company that is shorted roughly about 40%, they think there is an opportunity. Let's go over this Market Watch article, and I'll also give you my recommendation on what to do. Shares of Rocket Companies blasted 74.4% higher on very heavy trading volume in afternoon trading Tuesday, enough to pace all gainers on major US exchanges. The stock is headed for the biggest one-day gain since it went public on August 6, 2020, while volume nearly tripled the previous record. The stock has now skyrocketed 113.6% over the past 3 days since the company reported better than expected fourth quarter earnings and announced a special dividend of $1.11 a share. This is pretty crazy that their fourth quarter earnings were so good that they actually added when there was no dividend before. Meaning if you were just to own 100 shares of Rocket Mortgage stock, which for a majority of its lifespan was worth just a little over $20, so $2,000 for 100 shares, you would have gotten $111. Every share you got, they are paying you out $1.11. That's how you know they are doing good. They normally do not have a dividend yield. So yes, this was a very, very good earnings. But just how good were the most recent earnings? Let's go over some stats. They grew total revenue net for Rocket Companies to $4.7 billion from $1.9 billion in Q4 of 2019, and adjusted revenue to $4.8 billion from $1.8 billion in Q4. That is almost a 3x increase. They grew their net income to $2.8 billion from $0.8 billion in Q4 of 2019. I'm not going to read all of this, but I'm just going to leave it up. These stats are phenomenal. So because it did well, the shares deserved to see some appreciation, but as it appreciated, short sellers smelled blood and they started piling on. And then this is what brings us to today. There was an increased amount of short interest all the way up to 45.8% of the public float. This is nowhere near as high as it was for GME, which went well above 100% of the public float. And that's why we were able to see a short squeeze. At 45.8%, a short squeeze is very, very unlikely. Now, another catalyst that happened recently that accounted for some of this stock appreciation, because interest rates inched back up for a bit, and that caused the stock market to, I don't want to say crash, but to fall a little bit because people were scared of inflation. But recently they started to tick back down. The lower interest rates more people are more likely to apply for loans, and you need loans for things such as houses. So there is a temporary boost from interest rates coming back down a little bit. That still doesn't explain this huge spike. Wells Fargo analyst Donald Fendetti said on Tuesday, quote, "We believe the trading reflects retail Reddit activity like we've seen in other stocks recently. We noted our incrementally more positive view, but not good enough to support this move, which is the third trading day after earnings. We expect the shares to normalize and again trade on fundamentals. However, the timing is uncertain." And I really think this is the key. I think Fendetti is right. People just hear a stock getting shorted and they pounce. The market right now is very, very malleable. Some people are buying into it because they think they can make money, but some people are also buying into it because they just want to be part of the crowd. It's just fun. It's fun to pile onto stocks like they've done before. And retail traders are also watching the news very, very closely. Pretty reliably when you have certain analysts like John Najarian on CNBC talking about having a lot of call options on Rocket, that's a signal for people to jump in. And also, we have the ultimate stock pumper on TV, Jim Cramer. I don't actually mean he's a stock pumper, but essentially that's what happens. Some people genuinely, when Jim Cramer recommends a stock, they go into it trusting his every word. But some people also ironically invest based on what Jim Cramer says. And again, it's just all for fun. Jim Cramer is there for entertainment. He gives very broad level analysis and advice, but he's very, very smart, and he has a very big audience. So Jim Cramer recognizing this stock, saying that, quote, it's 38% short. When people see that, they think you can bust the sellers. Him just talking about it, even if he were to take a neutral view on the stock, which he hasn't really, anything he talks about just builds up hype, and then people want to pile onto it even more. But Jim Cramer was not neutral on Rocket Companies. He added he actually likes Rocket Companies management and business fundamentals. Quote, I have been a huge fan of CEO Jay Farner and Chairman Dan Gilbert, and frankly, don't understand why the stock did not react to what was a very good, where they basically laid out a story that just said, we can show how when rates go up, it has not hurt our business. When rates go down, it's not hurt our business. And there it is. That's the not so subtle dog whistle to, we like this stock, we should continue to pile in. The article also says the surge in Rocket could be a sign that retail trading mania seen in GameStop earlier this year is still a factor. A month ago, an army of retail investors on Reddit managed to push the brick and mortar video game retailer up 1,500% in 2 weeks, inflicting huge pain for short selling hedge funds. Wells Fargo also raised its price target slightly and moved up its earning estimate for Rocket following its big beat. So things are looking up for Rocket Mortgage. Personally, I am not going to invest in this. I don't want to do this type of momentum trading. This is all hype. It's a lot of hot air. Not saying Rocket Companies is not a good company, but having a 100% growth based on very good earnings is not really sustainable. You could definitely still make money, but understand that when you are investing in this company at $41, you are making a gamble, and that's totally okay. You just shouldn't see this as a safe investment, just like GME wasn't a safe investment. I think it will be very hard for Rocket Companies to experience a short squeeze just because the outstanding float, it's simply not high enough for there to be a squeeze. But that's just things as they are now. Who knows? If this horde of retail traders remains stubborn like they have for GME, and they continue to buy and they continue to hold, it's possible that we could eventually see another short squeeze if shorts continue to pile on. If they see this as Lord of the Rings Part 2, and then this is another stand that they have to go on, because there definitely has been enough action for it to significantly affect this stock. So I don't want to shortchange the power that the retail investors have. This was a stock that genuinely was trading under what it deserved to be. But now that we've pumped it up so much higher than where it should be, we are playing with fire again, but that's kind of the game we signed up for. Rocket Companies is just another battlefield for us to plant a stake into the ground. And like I said, I personally wouldn't invest in this right now because I've already spent all of my more YOLO-y money. But if you want to get into this, just understand that there are a lot of risks. It's very likely you'll lose money, but if you understand your odds, or if you really like Rocket Companies, I think it's fine to dabble. This is just like similar to an AMC type play where a short squeeze wasn't really happening, but there's enough going on behind the scenes that it's something you could make some money short term, especially if you ride the momentum of the crowd. But yeah, that's all I have for today. Let me know what you think. Are you going into Rocket Companies? Is this the next GameStop? Let me know. Please like and subscribe if that was helpful. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.